Let's move along to my next guest, who says there are too many cross currents feeding market volatility right now. So instead of bargain hunting, he says you should take the passive-aggressive approach. Joining me to explain this, Bryce Doty. He is Senior Portfolio Manager at CIT Investment Associates. Bryce, welcome to you. What do you mean by passive-aggressive?
Well, in this context, with all these cross currents, a passive-aggressive approach means that you take some of your money and you do keep it in the passive indices like the S&P 500, but you cut back. You take some of that, you put it in cash, keep some powder dry. We like our conservative bond strategy vault for that piece. And then away from that, you start thinking outside the box. You get a little more aggressive, and you try to catch secular themes, things that diversify away from the S&P 500. Because just to cover some of the cross currents that you mentioned, you have simultaneous cost pressures that are impacting margins, just like you discussed. Some firms are able to pass those costs on just great, and they're even going to be above and beyond. They're cutting out all discounts, things like that. They're actually getting margin expansion. And then you've got others where their margin is just getting crushed by inflation. So every time there's an inflation report, it's affecting different companies differently. You're like, okay, this helps this company's earnings, it crushes this person's. So it's really tough to know what to do. One thing that's safe to do in that environment are tips. They continue to outperform traditional treasuries. It doesn't seem to matter if treasury yields are going up or down. Tips can sometimes have a better day than a traditional treasury. It seems bizarre to me to see what happened yesterday, that after a strong 30-year treasury, 30-year yields dropped sharply, but tip yields dropped even sharper. How can that happen? Usually if there's a big demand for inflation protection, you see yields rising. And yet I think it's just a matter of too much cash being just shoved into the system between the stimulus payments and the Fed and the ECB, that's forcing everything up regardless. But there are some serious inflation pressures out there.
Yeah, and I think, to your point, the idea, this concept of too much cash is showing up in a lot of different corners of the market in really interesting ways. Let's go through some of the other plays. So again, just to reiterate, this passive-aggressive idea is to kind of, stay with the markets, broadly speaking, but then have these areas that are not as correlated with the markets normally. So that's where tips would come in for you. You also like the silver ETFs. You think this could be a crypto hedge, which I think is really interesting. You like hack the cybersecurity ETF vault. Tell me about even private debt and real estate. Obviously, a little bit harder for us to show a ticker there. But tell me about the ETFs you do like.
Right. So cybersecurity is a big theme right now. You're seeing money set aside in the infrastructure bill just for that purpose, to protect critical water systems, electrical grids, and things like that from cybersecurity. So that's just going to be a theme. Regardless of what you think about earnings and things like that, there's going to be some really juicy government contracts going there. So hack is the way to go there. HAAC, that's the play. The other way, other thoughts, iPay is another good ETF. It's not like electronic payments are going to be going away. The other themes that are out there on a secular basis, again, this is just a trend that's going to persist over the long term. You've got the cannabis play. It's MJ. I don't often recommend that, but that's a way to diversify away from the S&P 500. And then you mentioned silver that I like, because I understand the thrill of cryptocurrency, and I own some myself. Okay, but it's a volatile, dangerous play, and I understand that the government's kind of driving investors towards that by printing so much money. There's too much spending going on, and I get the whole story. But it might be nice to like smooth out the ride a little bit and go with precious metals. So SILJ is a silver play that's a little more stable and a little more rational. I think that people should consider if they're looking at just crypto. Don't just do crypto.
Or uranium. That's the new silver, the way the markets are behaving this week. But I take your point. Bryce, thank you very much for kind of putting this all together for us.